All right, welcome to the weekly meeting, February 24th, last week of February. Um, this is the last week of February. Friday will actually be a new month, but it's not.
Todd, did we lose you?
Hey, can y'all hear me now?
Oh, yeah.
Yeah. This is not this is not NFP week, by the way. But but this is the last week of the month. Hey, new off. All righty. The plan today is to get some back testing done, since I know y'all don't do it. I know y'all don't back test, so we're gonna get some of that done today while we have a captive audience. Yeah, I mean, any objections?
No, sir.
Let me see. All right. What did it do, Willie Ross?
Oh, I'm great, brother. I'm great. How you doing, man? I'm officially 100% back in the saddle, man.
That's
Just
what's
had a
up.
lot of stuff going on, man. Now, I'm squared away.
You know, it wouldn't be life if it wasn't a bunch of stuff going on.
I know. And I feel like I've been going so hard for so long. I'm like, man, I'm gonna give myself these 45 days, clear my head. I'm good now.
But glad you're back there, brother.
Never too far away. Never too far. The alerts is still on.
You said the alerts are still on?
Yeah, I always see what's happening.
Yeah.
And, I might see TT say, look at you, Jay. What's you like? Yeah, US 30 ain't doing what it's supposed to do right now. I'll be paying attention still. I just haven't been super active in the community.
So, really? Can y'all see my screen?
Yes.
All right. This is the COT report, basically, right? And this report is as of February 20th. So Tuesday. Tuesday. Looks like they shorted the basically AU. They shorted AU on Tuesday. They shorted the euro dollar. And these are basically the net positions, all right? So it's a massive shorting that continues on EU. and probably the rest of the euro too. I don't know why or what's going on, but that is kind of weird to me.
Well,
Okay.
I mean, I read that Europe was in a recession, so maybe
Well,
they
I
anticipate
think
their rates
I
being
think
cut, and that's why they're shortening.
well, I think that uh Britain is in a recession. They're probably both uh headed there, but Britain announced they were in a recession. So um maybe euro is too.
Well, if the country is, then they're most likely going to cut rates. So if the country is in a recession, maybe they're getting ahead of the anticipated rate cut.
Yeah, maybe. Who knows? I would just really I would expect to see um the British pound being shorted more than the euro. I guess that's kind of what I'm getting at. And I haven't seen it. Even on the chart, when I look at the chart, I look at we'll just do that. We'll look at it. Let's look at the weekly chart. Okay, so on the weekly, big picture wise, we had a chart. We need to come back up. We filled the imbalance. We're pushing down. In the internal structure, we had a chart right here. So we needed to trade back up and mitigate, I guess this order block, which we did. It kind of left these relative equal highs, which I really thought might be taken out, but they never were. And as things have been turning out, it looks like we could possibly start dropping from this level. And when I go to the 12-hour, this is definitely a zone that got tapped into. Who knows? Maybe it pushes down, comes up and takes out these highs because it could technically trade back up to this level. But right now it went from this zone. Maybe it goes down to the bottom to this zone and bounces around. We kind of have to trade what we see. It's about a 93 pip move to the downside. So big picture wise, when this thing does drop, I want to target this inbound at 101. So if Europe recesses, then this is probably what we will eventually get, a drop down to this imbalance. Going over to the British pound. The British pound. Same action, right? We got a chalk. We got to push up to the area. But this one hadn't really broke out like the euro did. It just kind of been consolidating. But if you drop down to the daily, I think we can definitely see the choke. We pushed back up to this imbalance, and we pushed a little bit higher last week. So along those same lines, and with this country actually coming out saying that they were in a recession, I thought that we would push up to this level before we sell. But Friday, we didn't push up that high. We kind of just bull crapped around at these same levels. There is still a lot of imbalance that could be filled to the upside. Look like about 100 pips from where price is, 126.72 to 127.73. So about 101 pips could be filled. I'm not saying that this has to be filled all the way. I mean, it doesn't. We all know that, but if this thing rolls over in the next week, then it could go ahead and fall off a cliff. We got a bullish order block, which means we could sell down, then go up and take out the high, or maybe we go up first, take out the high, and then sell and keep selling. Just keep in mind that this is a bullish order block, but all order blocks aren't created equal, and this is just a pullback that's touching our MAs. So many times, if the pullback takes us to our MAs, it just means we should get in the trade to continue to short it. And I think we're at a turning point to where we can expect more downside action on these currencies against the dollar versus upside action. Nuwolf, are you there?
Who did you say?
Nuwolf.
Oh,
Maybe he fell asleep. Okay, so what pair do y'all want to back test?
EJ.
Erkenjack, what was the did they have a block last week? I guess it doesn't really matter. We can test it without the block. We can test it without the block. So basically, it's a JPY pair. So we kind of understand that it started pushing up at 1st of January. Me personally, I like to go to the higher time frames because I want to kind of understand what we have, what the chef is cooking up. So I go to the 2-month chart because we got 5 days left on this boy. Okay, so if I look at the supremely high time frame of the 2-month chart, we have a bearish order block that we tapped into in November. We pushed down, and it looks like if everything goes well this week, it looks like we'll have a bullish order block to start off in March. We got 5 days left on this green candle, so everybody kind of understands where we ill. Any questions? All right, so I like to try to go down time frames so I can see. All right, this is my monthly zone. We haven't quite touched it, so maybe we will push into that this week before Freitag. All right, so even further up in here, you're going to get more order block. It's probably going to be at the top side of this joint. All right, there's a weekly zone here. Okay, so some people like to trade half of these areas. So I'm just going to partition this bad boy up. We'll make this red. Oh, rojo. Okay, why did I do all this? Basically, this is the zone that we are very close to on the 2 month chart. So if I take half of that zone, that red line is the half of the zone. Some people like taking trades, only like taking trades at the halfway point. So they want to see price push all the way to the halfway point. And that's fine. They'll sell it once it hits that halfway point, back down to a different zone. I believe that was a monthly. Okay, so if you're going to take a trade like this and you're going to trade it zone to zone, if everything stayed the same, we would probably take it down to this level. Again, this is a higher time frame trade. So what you could do, once it taps in, you can mark your zone down in this area. We'll go ahead and include this wick in here. If you've never done this before, then you should probably attend Kim's class. I used to do I've done a video about framing the market. So, it's kind of is the same information. I mean, it might be said a little bit differently, but it's the same thing. And for those of you who are confused by back testing, by us marking the chart up here, don't be confused, because you're going to do the same thing when you go back in time. Okay, so this is the middle of your zone. This is the middle of your zone here. So you could technically take your trades in between these zones. And what we want to do, since we have weekly order blocks, I want to go and I want to mark up my zones in the rest of these areas. Okay, this week, in this case, this weekly and this 2 week is going to be the same thing. So for the most part, you can see if you mark up your zones on the higher time frame, and your weekly and your 2 week order blocks, whatever one you want to trade, the ones that occur in your zones are going to be the ones specifically that you want to trade to and fro. So might have to go back and remark that. If you're trading to and fro your zones, some of y'all might be confused of why I marked this up the way I did, but we'll talk about it. We'll talk about it. We'll talk about it.
Good evening, good evening.
Oh, Sleepy, what's up, huh?
What's up, man? What y'all looking at?
That EJ. I'm just marking up these zones. Okay, let me go back to the 2 week on this joint. Okay, so basically all I did was mark up 2 week order blocks or 2 month order blocks. And then I went down to the 2 week to narrow it down. And I started on this side of the chart, I just went right, went left. Because if you notice, they all gonna be the same, bro. So if you have your zones, and I don't care how you trade them, you can mark the middle of this zone if you want. Or you can trade the edges. Once price hits your edge and gets a reaction, you can take that trade. I think the important piece from this is if you're trading your zones, if you're a swing trader, right, and you understand that we're on an uptrend. So when price crossed, in my case, this moving average, and it pulls back, I can enter this trade. I can take it from this zone to this zone without an issue. We crossed, we pulled back. I can take it from this zone to this zone. It doesn't matter what time frame you're trading. It matters how you're taking your trades. So as a swing trader, for me, I need to have my moving average on my chart, because in order to manage my trade and to understand that I'm still in trend, I need for my moving averages to line up with my pair, and I'm going to make sure I'm going in the right direction. So on whatever time frame I'm managing my chart from, I can just pay attention to the moving average. So in this scenario, we're going to go back to our January trade that we took. We all understood that we were going to get a upward moving trade. The important thing here is we're in a zone, right? We're in this zone. And price came up, it broke out of our zone, it didn't make it to the zone. So it broke, it retested. So we're taking this trade north. We just have to decide when we're going to enter this trade north. And if you're trading that super high time frame, which we weren't, I get it, but whatever time frame you're on, you're going to do the same thing. So you could have took this trade from this zone all the way to this zone, right? Now, whether you take that trade all the way up or you just take it when it hits your zone, that's going to depend on you as a trader and how you manage your trade. And what do I mean by manage the trade? If your entry criteria, if you're going to enter this trade as a swing trader on the 4-hour chart, which I do, I enter this trade when it crosses my moving average on the 4-hour chart, right? Pulls back, you can enter the trade. What I was supposed to do is go to the 8-hour chart to manage the trade. So every time the trade comes back to my 8-hour moving average, I can add another position, add another position. If I added a position here and it comes back down and it breaks below my moving average, I got to get out the trade, right? If you understand higher time frame bias, you can go to a higher time frame and understand that, hey, maybe this pullback is happening on the monthly chart or on the daily chart or, you know, on the 16-hour chart or whatever. So you can go up to the daily. I mean, I still would have got out because this is still too deep of a pullback. So it's probably on a weekly. Yeah, it's definitely a weekly. So we see how the weekly had just broke the moving average and the weekly pulled back. I still would have got out because you can get a re-entry once the pullback is over. But all you would have to do is fib from here to here. Let's just do it. Let's not talk about it. Let's do it. You fib from here from this push to this finish. Your pullback brings you right to your zone, your discounted rate, which you buy again. So you could have exited your trade when it crossed over on the management time frame, which was our 8-hour, right? You would have exited the trade when it crossed over your moving average and closed, right? Then you go up and see which time frame it's pulling back on, and you would have fibbed that move. So you'd have saw the weekly, and as soon as it comes into your 50%, you could have entered for a long, or maybe you didn't trust it, right? Maybe you didn't trust that the trade was going your direction. So once it crossed back over on your management time frame, you could have got you a long. If you understand liquidity, you would have saw this as a liquidity grab, I'm sure. This would have been a liquidity grab. You'd have understood where you were on your weekly chart, which is right up against the moving averages. We're still north on the moving averages. Your target would still be up here on the weekly chart, higher on the 2-weekly chart. So you would have all the reasons to get back in the trade when you see the liquidity grab. But if you didn't trust it, you could have waited till you get a break of the moving average, wait till you get the pullback, you could have entered the trade, and you'd have been back on your way to your ultimate take profit. That's a swing perspective. Does anybody have any questions?
It sounds like you're telling a beautiful story. It just flows out of you. I mean, top shelf, man, top shelf.
I know it's probably a lot of people who don't swing trade, right? You can take the same information and you can lay it over the time frame that you trade, right? My point in starting here is so that we understand that these zones aren't going to change much, man. Like if I mark this zone up, this zone is going to be this zone forever. If my trades are coming and they're reacting in here, they're going to react in this same area forever. It's not going to change. These areas are going to get the same reactions. Why is price coming to this area react? Why is it reacting in these same areas? It's the same zone. So if you understand that, then that's really where you should start. As if you understand that as a trader, right? So I know we don't trade the 2-month chart. I'm not saying that we do, but I just started there because as a swing trader, it's important to me because I can get better moves at these top zones. I'm not going to trade per se that top zone. I'm going to trade the weekly chart, which is why I like getting the information on the weekly order blocks. But when I get the weekly order block and I'm bullish, right? I'm cool. When we break out of this zone and we pull back the retest, I understand that we're going to this next zone. I'm bullish, right? So I can take my trade with a greater deal of confidence to the next zone. And you just take the same things that we did and you take it down to the lower time frame. So if you're a 15-minute trader or a very small level trader, you can mark up your 4-hour zones. I think Kim, you use the daily zone in your beginner session. It's the same stuff. It's just a different time frame that you're using to mark up your zone. And you're looking at the chart, and the chart is telling you basically a story, right? It comes in this zone, it double bottoms, it pushes up, it eventually breaks out of the zone, it goes to the next zone, right? You get consolidation, a fake out, a pullback, we grab the liquidity, go to the next zone. Sit. That's all, man. Hey, Newell.
Yep.
You
What's
can
up?
you can take over for the and show up, I guess, on the 30.
No,
Y'all have any
I want someone to take this wheel, show the screen, and we're gonna back test together. So
Hey,
whoever wants to volunteer, please do right now. Otherwise, I ain't saying nothing.
my guy.
Hey, does anybody wanna share?
Let's go over at least 3 months of past data. That's how we're gonna, I'll walk you through how you guys gonna do the back testing, and then you can use this and try to do this every day for at least half an hour. So whoever wants to volunteer, please do share your screen.
Anybody? Who's afraid, man? Are y'all scared?
I wish I could, but I'm on my cell phone.
Your cell phone, you can share it.
No, you need a desktop. Nope.
Exactly. She needs a desktop.
Somebody got a desktop. Come on.
Yeah.
Where Leandra at?
Leandra, where them biscuits at, girl? Bring them biscuits in here.
Lily.
Chanel, Phoenicia. Anyone?
Lily, Tosh.
Oh, I'm the good cop now. Hey, gotta love that. Gotta love that.
Okay, I want everyone to type on the chat. What is their definition of back testing? Or just speak it out over here and I'll tell you whether you're right or wrong. Don't feel shy, just go on. Because you guys seem to be very intimidated when it comes to the back testing.
Yeah, it's just real noisy in my background. Can y'all hear me?
Mm-hmm.
All right, so back testing. You have a strategy and you're seeing if that strategy is gonna play out. And yeah, and practicing looking for your strategy or your entry
But how do you do that
points.
on TradingView?
Or in TradingView,
Mm-hmm.
Okay, well, I'll go back a couple months and go whatever time frame I'm going to look at. Try to go through it the same way I would do is if I'm doing order blocks, then I'm doing the order blocks, I'm marking up, I'm looking through, and then going to whatever time frame that I would trade on and just watch how structure moves on that.
So
Does that make sense?
it does make sense, but you
Okay.
didn't mention, I don't know, there's a valuable point that you missed out. When you take the trades, do you jot them down? Your wins and
Oh,
losses?
I don't.
Okay.
Nope, I just keep on going.
Okay. So try doing this, Ash.
Mm-hmm,
When the next time you backtest, okay,
mm-hmm,
try to look for 10 setups. Okay, 10
okay.
trades and see your wins and losses. Okay.
Mm-hmm,
If your wins are more than your losses, then you're good.
okay.
If your losses are more than your wins, then look how you entering the trades. What are the differences between your wins and your losses? Does that make sense?
Mm, yes, it does. That's a good way to get your win-loss ratio.
No, that's a
And
good way to show you
right.
what are the things that you need to work on. Maybe you're entering a trade too
Mm,
early, or maybe not following your criteria, or your confluences. You see what I'm saying?
mm-hmm. Yeah.
So
Okay.
this is why I encourage people, like, for example, for me, I want someone to come on and take the wheel and just, back test me. Because this is my way of basically showing you where your faults, you see? And at the same
Mm-hmm.
time, it's a learning process for everyone else. So once again, guys, whoever wants to share the screen, please do. Otherwise,
Mm-hmm.
nothing's coming out of me, being very
And
frank and
Okay.
honest.
Right.
it's a supporting role that we all need to have an idea of being supportive. Because when you go back and look at this video, it gets very quiet. That's not what's supposed to be happening. And we should have people in line already to just, okay, you're
Mm-hmm.
going to do it this week. This person's going to do it this week. You see what I'm saying? We're family, right? We got to get this going because it's a package that we're developing, and then it can roll, right? There's people that have been doing everything that we're supposed to do for a long time. That's the first wave of leaders in the group. Now a next wave has to come through. We have to grow it, right? So don't be afraid to just get up there and go through it, right? It's to get you to that $1 million. There's no way that anybody in this group can't make $1 million this year, right? So it starts by stepping up, and now Isha's already done that, right? Alicia's done it. TT's done it. Selena's done it. Elfie and Ebony have done it. Marv, he's doing his thing, right? He can't do it, but he's always available to show his results and stuff. Like Kezi is top, taking top places in the competitions. Like you see that Summer Rain, Pipette, you see the names. Like it's got to be a new wave of names. These guys already took advantage, right? They don't have time. They already did that part, right? It's time for the next wave of people to come in and do that, right? We're always going to be here, but we can't do this stuff all the time. That means we're not doing our job really. If we don't see new people stepping up, we're not getting it done. And it's annoying because everybody's still here, but they don't step up. Like, come on, you gotta do your turn eventually.
Yep, it is a cosign. I don't even know why you show up if you're not going to participate and
Yeah.
take advantage of the knowledge that's in the room. I'm asking a whole bunch of questions. If I'm just asking everybody, hey, so how you do this? This is what I know. Regardless, what I know may not be the right thing, but at least someone who does know is there to correct me. But they're not
Yeah.
going to know to correct me if I'm not speaking up and I'm not saying anything. but I
Yeah.
need to be up in about 5 hours. Love y'all. I am
Hey,
going to bed. Take care, y'all.
have a good one, sis.
Thank you. You too.
Like, but yeah, it's gonna get you there. When you start seeing the money, it gets exciting at that point. It's not that exciting when you're not winning. We get it. But once you find out that it's a lot easier than you think, and then you can't be quiet at that point because you're so excited. Now you're talking about everything. You got to be that before you get there, right? Fake it till you make it, or whatever you want to call it. You want to have that energy. Like it's like a sales thing. Like I hate sales. I've never done sales, right? But I've figured out my voice, right? I've figured out how to just give people information, almost like a salesman. But I'm selling something that sells itself. And any salesman will tell you that's the best thing to have, right? So I learned how to sales pitch, right? Forex and everything that comes from facts and truth and healthy price action, all of that, and develop how to speak that and make it sound really good, right? So you have to find your voice in it because what you speak is what you do, right? People don't want to speak because they're doing stuff in the background they're not supposed to be doing, and they come out here and act like that didn't happen. That's why we say 10 trades. You may take 1,000 trades, take 10 of those 1,000 trades and just look at the win ratio and do the math. And then it'll fix all the rest of the 1,000 trades. Just start with 10, right? Any 10, because we know you do it thousands of trades. Just take any 10 at any time and just intentionally figure yourself out.
Who wants to
Who's
share their
up,
screen?
guys? Yeah, who want to share the screen? I promise you, you guys will not. Whoever's going to share that screen is going to be. It's going to be a personal one-on-one. You're not going to regret it. Rose, you there?
Oh, I don't back test. I
I'm here.
forward test.
Would you care to care to share your screen?
I would love to show my or share my screen, but I am on my phone and I'm leaving out the door to go snowboarding today.
Oh, nice.
Ooh,
Okay.
he
But
always in
I
the
would love to
business.
if I was prepared.
Okay.
That's the life of an awesome trader right there. That's the example, the proof, right? Yeah.
But yeah, I encourage anybody to do it because it's definitely going to be helpful for you. So if you're scared, do it. You'll be happy. We'll all support you.
Summer Rain, Rosa, Barbara, Cassie. If this is the case, I'm logging off, y'all. We'll catch you in the morning call.
Yeah, I stopped back testing. I'm a Jedi now. I don't even have to back test. I just look for numbers. So I'm glad because yeah, Nawaf is a naked chart trader. He always told me I had too many lines, and I got to the point where I don't use any lines anymore. So yeah, it just happens. You know what healthy looks like. So it just makes things so much easier. If I do go back, I'm gonna look at a great example is to go back to last first quarter, second quarter. So I want to see the structure from January through March of last year. That's a good back test. Like what price range was it bouncing in between? That's what I would be interested in. And then see what happens this year. Just like Todd said, last year, the JPYs did exactly what they did this year in January. Well, that was an easy back test, right? You just go back and look at last year. You got January coming up. He knew that, right? So there we go. And then we'll see next year what JPYs are going to do. So same deal. I mean, we have a lot of people in here that are successful. And I think that's, they are here playing support, right? So it's the people that aren't here, right? All the names that I see here are people that actually make money. I don't see any losers in here. So I think we're all the winners. So I will say that. They show it in the Kezi's placing in the competitions. We don't have anybody here placing but Kezi. Like, so she's good. Pipette, Summer Rain, they seem to be good. So Rosa's good, Barbara's good, Marv is good, Mo is good, Leandra should be good. So yeah, this is support, right? This is what we do. We always back each other up. We're always the ones there. That's good. That's a good thing. But we want to see people retiring. That's what we want to see. We want to see people getting their snowboards and going up the mountain. That's what we want to see. We're not seeing that. So when we start seeing that, then we be like, okay, that we're living now. Now we can meet up and do stuff and move around the world freely. But until that starts showing itself, we're not there yet. So we got to keep doing the work.
All right, people. I'm out. Catch y'all later.
All right, bro.
All right, Nua.
Oh, you want to see me do it on the chart? Well, I like speaking it, right? I try to put it in words so that you can visualize it in your mind. That's why quarter levels are very important to me. I don't care what the chart says. I just care about what quarter levels it's approaching, because those are institutional levels of trade. Yeah, like I said, I put it in words. I need you to visualize it, because a lot of people don't know healthy price action. That's what the beginner's course is for. You learn that there. I mean, it's good to see me do whatever, but what I'm trying to get people to be more focused on is the higher time frames. That's what Todd has me on, the higher time frames now. I'm not worried about anything on the in-betweens. I'm looking for long-term, long. Once I get to the area of the pivot, then I can start scalping and I can scalp during the day and go from level to level, but it's the long-term levels that make the most sense. So if I play on the in-between, I'm going to be getting hit. I don't care about getting hit, but I don't have to get hit. I could just wait for it to get to where it's supposed to go, and then I could start doing everything I want to do there. Right. So I listen to Todd on everything long term, because I don't need to get hit in the in-betweens. So that's why I say forward test. I'm focused on what's happening with the Fed. I'm focusing on the bank bailouts. I'm focusing on what's going to make price pivot. That's a forward test. That has nothing to do with the chart. I don't have to mark up trend lines, nothing. I just wait for the news and the narrative to be right. And we start seeing the volatility. We get to see the reversal pattern at resistance, a topping tail. You want to see the market spark up to the top and then come right back, just like gold did, and leave that long wick. Now you know it's there. That's reversal, right? So we're looking for that. Once that happens, we're good. See, I don't need to be on the chart for that. I don't have to back test that. All I have to do is wait for the Fed to do, or whatever the narrative is that's going to make it do this little action. Once that action is done, we are all in the win. I'm telling you, when we see this at resistance, it's going down, and it's going to go down hard. So I'm just waiting for that. It's not anything I have to do on the chart. That's why I say it. That's why I put it in words. I talk about the narrative. I talk about going to a specific number. That's any pair, right? You will see it. You'll see a reversal pattern. It'll be a 4-hour candle. And then the next 4-hour, 8-hour candle, whatever it is, there you'll see your pivot, you'll see your bearish chalk, and then you'll get your tap in. That's everything that's taught in the basics in the beginnings course. That's everything I said. I don't have to put up a chart for that. I could just say it. And when people are tracking that, now if you can say that, then you be able to do that. Because if you can't say it, then you're confused. You're in no man's land. Right? With simple idea and theory based on what we're seeing with the charts.
Okay, let's get back on these on these charts because
Hey.
I need for everybody to kind of, first of all, who all swing trades and how do y'all trade? Now that's kind of the first question. How do you trade? If you're listening to me, all right, I'm always talking from a swing trader's point of view, right? From a swing point of view. Whenever I tell you or whenever I say, hey man, EU is going to sell, I'm talking from a swing trader's point of view. When I look at this weekly chart and I see this chalk, this break of structure to the bottom side, I know that we're going to sell. Now we have to come back up and mitigate the imbalance first. It's all downhill from here, right? Once I get this mitigation, I don't expect price to come back to this level. Now I'm looking for internal breaks. We break this structure. We break this structure. I'm looking for another mitigation. Once we leave here, price, I don't expect price to come back and violate these highs. So it's important that we understand what we're looking for and what we're looking at on our trading levels or our trading structures, right? Because a break of structure on this weekly chart, it still needs to buy up 500 pips to mitigate an imbalance. And this is a counter trend trade for the swing, but that's 588 pips. I'm taking buys to that zone, right? But when it gets here, I'm looking for shorts. So whenever I say, hey man, EU is going to short, it's going to sell, we might not be speaking the same lingo, right? On this daily chart, when we broke this low right here, I know it's time to sell. Now, what I don't know is how far up we're going to push. I would like to see us break these highs. I mean, I can throw this fib on here. And what am I looking for? Everybody should know that. What am I looking for? When should I be comfortable with taking a trade?
Chop.
Well, chalk, but I want
50% retracement.
There you go. I want price to get back to premium before I take a short. Now, if I take a short from down here, I have to take a short with the understanding that it's going to be a short trade, right? Maybe I take a short and it trades back down to go higher. These are the things that we have to understand in our own trading. Like, if you don't know what you're doing, it's a horrible decision to take a short from right here. I might take a short from right here, but overall big picture, when I take this short, I understand I'm taking this short. Maybe this is a chalk on this daily level. So it's going to pull up, it's going to pull back, then it's going to go higher. But I don't explain that to people while I'm trading. It's just kind of, I kind of understand what I understand. And I'm assuming that you understand too. Like, we understand that we're not taking, this sale is not going to take off and go all the way down on a trade from here. It needs to come up to premium first, which is above the 50%, right? Then it might sell off, right? So I can look at these equal highs. I can assume that those are going to get taken. I can look at these equal highs. Maybe they get taken. And when they get taken, there's some imbalance right here, right? That's kind of what we want to see as a trader. See that imbalance? So maybe price goes all the way back up here. And if you look at this, if price comes from down here to up here, that's 234 pip move. That's a healthy move. So you have to have an understanding or an expectation of what you want to see as the trader, right? if you don't have those expectations, or if you don't have a firm grasp of what you want to see, you're going to get road graded. And you're going to get road graded because you're skipping steps, right? If you are a break and retest trader, where are you taking the trade to, right? If you consider this a break of structure, where does your retest need to hit? My retest need to hit the 50% before I can take it down to the next level. Before I expect the trade to get here. Righty. Before I can expect this trade to get down here, I need it to sell from one of these areas. Does everybody understand that?
Yes.
Yes, Todd, this is Rosa. And it's just that I don't talk because this is all I can do. I do the weekly, and I just look for I see any pair, I'm just looking for a weekly order block. And I mark the 50, the 60, and the 78. And I just look to see if it's going to go to at least to the 50 and give me 100 pips, then I'm good. I get mad because it goes further. But my trade is, and then I put me a stop loss. So every week I go in, I look for a weekly order block, and I mark the 50, and I expect the trade to hit that. And once it hits that, I take my money and I get out. And I get frustrated because sometimes it goes to that 78, and I understand that 78 is powerful, but I don't take it and I get mad. But at least I'm satisfied because I got my 50. That's what I wanted. And if it hits my stop loss before it gets to the 50, I just won't trade anymore. I just stop and wait till the next week because I'm stuck on just that weekly order, or that weekly 50%. And that's how I do mine.
Rosa, I'm very glad to hear you said it. And this is, I used to be there. I remember in 2020 when I did that, when I first started trading retracements. Do you know something that can give you bigger moves? Do you know if you trade instead of the weekly, if you trade the 2 weekly, or if you trade the 3 weekly, this will give you a bigger move? Did you know that? So let's just say, the moves are probably going to be longer on these 3-week candles than they are on the 2-week candles. So if you're trading one of these candles, you're probably going to get a better move. So if you just try to do that, that may help you. It's going to be sometimes, though, when you get an order block and it doesn't pull all the way back, it's just going to expand because you're getting an expansion. There are ways for us to tell all of these things. And if we mark up our zones first while we're trading, let me go back to this EJ chart. If we mark up our zones when we start trading, when we get this 3-week candle that leaves that zone, we expect this to be an expansion away from the zone. And normally when you're leaving the zone, it's going to create an imbalance. So this 3-week candle, I wouldn't try to get a 50% move because I understand that this is an expansion candle. We're leaving the zone. So maybe I don't try to get this pullback. Maybe I wait until I see exhaustion in order to trade a pullback. These are things, though, that you go and you back test. These exact scenarios, right? This candle is leaving my zone. I don't get a pullback. Wow, how do I know that? How do I know that? Because you look at this kind of stuff. This is exactly what you look for when you go and you test your strategy. How come every time I leave my zone, I don't get the pullback? Here you got a pullback. This is a rarity when you're leaving a zone. Generally speaking, when you leave your zone, you're going to expand out of there. So I don't look to trade a pullback if I'm leaving that zone. But you guys have to kind of understand and come up with with how you're doing it. And Rosa, if you don't get this, let's say you're trying to trade a pullback on EJ, right? And it just keeps going. What do you approach that?
Then, if it keeps going, I just get out. I just say it didn't give me the pullback. So I just cut it because I say it's going and going and I don't know where to get back. I'd be looking around for another order block that I think it could come back to.
So this is why you mark your zones prior to. Like if you had these zones marked, right? This would have went right to the next zone. Now you're getting the pullback away from the zone. You can catch your 100 pips on this pullback. That pullback is 680 pips. So if you would have saw, right? If you would have saw, hey man, this pushed deep into my zone and it's pulling back, you already understand, well, we didn't get a pullback to this order block. So I can trade this back. It's probably going back to mitigate the imbalance. You understand?
Yes.
Granted, these are long. I want you to not pay attention to this as a 3-week candle because this is how it works on a 4-hour candle too, leaving the zone. This is how it works. If it just leaves your zone and pushes to the next zone without a pullback, it has to come back and mitigate that imbalance. So just like you said, hey man, you cut, you don't trade it. Once it gets to your zone, now, hey, I understand it got to come back and fill my imbalance, right? This pushes up, it comes back, fill the imbalance. This next candle, fill the imbalance, push up, right? You push up into the zone, you come back, you feel the imbalance. So however you choose to do this as a trader, right? You don't have to be shell shocked. You just have to understand, okay, we pushed out of the zone. Now, when are we coming back to mitigate the imbalance? That's what you need to go back and back test. You go back in time to see how that looks and how that works. Because that's when you're going to get the answers to how you can trade that, right? How many times it works, how many times it doesn't.
Oh,
it's the only reason that I understand that when you leave these zones, most of the time it don't pull back. It leaves, it gives you the expansion because it's getting out of there. You can trade the pullback at a later time. And how do you get in if this pulls back and doesn't pull back? You have to get in on a lower time frame because on a 3-week, it's not pulling back. But on an hour or on a 4-hour, it's plenty of pullbacks that'll let you in this candle. Does everybody understand that?
Yes, I do.
So
Yes.
I didn't get that one.
So you're on the weekly. You trade the weekly, right, Rosa?
Yes.
So let's just say you're on the weekly and that joker didn't pull back. It just like this, it didn't pull back to the 50. It just started pushing up. Now you're just going to drop down to the 4-hour and you should see order blocks or green candles that are going up. So on that 4-hour, this green candle might close. Then you get a pullback and you can fib that green candle, get in on the 50% pullback and you ride it up. Does that make sense?
Yes. Okay.
So that'll give you a new trade or a new piece to add to what you're trading. If the order block is bullish, you're just trading the pullback to the 50%. You're not trading the actual bullish move, right?
No.
Okay. So your next step is you're good at trading the pullback. If it doesn't pull back, you're saying, dang. Or if it pulls back to the 78, you're saying, man, I could have made money on the trade. Well, really, you should be saying if it pulled back to the 78, now I can get in with confidence and buy it because it pulled back to the 78. I can at least buy it to the top of this candle, right? So if this is an order block and it pulls back to the 78, you can at least buy it back to the top of the candle. That gives you 2 moves. Even if you don't understand that you could buy it to this high, and really we all should understand that this is the high, right? So if this is where price started from. We broke this high, we pulled back. Price has already been to this high. Price action is bullish. It pushed up and told us, hey, this is the high, guys. I'm gonna pull back. Anywhere you get in here, because it didn't break the structure, it didn't break the low, you should be able to trade it back to this high. So if you get in here, if you get in here, your target is this high. It doesn't matter. You get in, ride it to that high, take your profit. Y'all tracking?
Yeah.
Yeah, Ty, can you fib that?
This move right here?
Yep. And see, Rosa, you see where it goes to the 78.6?
Yes.
But you won't ever see this if you're just on the weekly chart. And I'm not knocking what you're doing. I think what you're doing is great because most people aren't disciplined enough to do what you're doing. Hell, you weren't disciplined enough to do what you was doing until a few weeks or a few months ago, right?
That's right. Yeah. I was tearing that US 30 up, giving out my money away.
Exactly. So this is a testament to how far you've come as a trader. You found something that worked. You take that one thing and you work it to death. Eventually, you can add something new. But you can never add if you never go back and you look. The devil is in the details. Like this is how it works. On a larger time frame, you can't see all this little stuff that happens. But when you go back, when you go down and you start dropping into the time frame and you start looking at it, right? Not only if this is a 78% pullback, but when is your pullback happen and when is your entry? What time is this? Look down there. You see it at the bottom of the screen? Anybody?
Oh, at that 1 o'clock.
1 a.m., which is
Yeah,
the
1.
kill zone for London.
Oh, yeah.
It's not a coincidence.
Yeah.
Price pushes up. Price pulls back. What time is it? New York session open.
Yeah, 9.
Not a coincidence. It's not.
Oh,
It gave you an entry and it gave the New York people an entry. And it took you both. It took you right to your take profit, both of y'all. It's not a coincidence.
I think Rosa is a great example of who we should be working with right now. I think we should work with Rosa for the next couple of weeks.
Rosa, when do you trade? New York
well,
session?
I try to get in at the on Sunday, you know, well, yeah, I look at Sunday, I look at the you know, I get my weekly, I see Friday that I see a weekly order block. So then Sunday, I will
You're in
wait
there.
and see where it's going for that
Uh-huh.
first hour. And somehow I think, okay, I think now it's ready to start pulling back. And I hit the button and I just try to hold it to that week to get to my
Your take profit. I
to
love
my
it.
take profit. Yeah.
Hey, Rosa, you're the person that I came up with that God's plan for. And
Yeah. And then I like that God's plans too. I
yeah,
do
you
that
can
one.
work on it. Now you just take it and you graduate. So and I know you don't understand chalk and all that stuff. But if what you're doing works, you put that in the bag because it's been working for you. All you have to do now, you can add to your repertoire, which is you know what time these moves are happening. We say this all the time. These moves happen at the same times all the time because that's when the volume comes into the market. These moves aren't arbitrarily happening. This is a 1300 move that runs into the close. This is one of the moves that the ICT talks about when a trade is spooling. But your move that takes you to your take profit, it's going to take both sessions to your take profit. It happens on the open, right? Then you get to New York and it pulls back. This is 5 in the morning, New York time, right?
Yes.
On this pullback. 5 in the morning, at 9, you get a pullback. It lets you in the trade. It takes you to your take profit, which is you had to hold this trade for basically 12 hours. 9 in the morning, New York time, gives you an entry to buy back up to that same high. You held it 24 hours, right? Or actually a little bit under 20, like what is that? 4 hours, probably a little bit over 24 hours. 24 hours, a day and a half, you had to hold this trade to get back to your entry. 9 in the morning, you sell it. It's easier to see if you break these into 1 hour candles versus the 4 hour candles. But if you break it down to 1 hour candles, you're going to see that the moves that give you the pips happen at either London kill zone or New York kill zone. And it happens 90% of the time. It's just the way it works. And you trade, you found a system that works in Asian session on Sunday, and you just hold the trade, which is perfectly fine. Because swing traders, your entry time matters a lot less than somebody who's trading intraday. But my point is, if you want to add some tools to that toolkit, you'll go to that hour chart and you'll back test. I really wish y'all would have, some people could have got on with Nuon, because you will see all that stuff very cleanly, right? So if you look at this, you look at this move right here that happens during London session. This is 3 in the morning, right? Price comes down at 3 in the morning or 2 in the morning. Actually it came down. This is 3 in the morning. This red candle is 3 in the morning. At 4 in the morning, you get a bullish order block. That might not mean a lot to a lot of people, but for me, if I got a bullish order block at 4 in the morning, I'm buying this right here and I'm going to sleep. I know that this is a chalk, right? This is a chalk. That's all this is. This push up took the Asian liquidity high, pulled back 78%, and gave you your entry at the end of the kill zone for New York. Now, other people might be confused because you had a bearish order block at 8 in the morning. At 8 in the morning, if you saw the low here and the high here, you should have been able to fib this, and you could have sold this down 60 pips into this zone right here for the buy.
Hi, can you make it bigger, please?
Big picture, we all see what's going on, right? You just saw a push down into your zone because we got the zone marked up. You just saw a push down into your zone, a liquidity grab.
What the heck?
What do you mean, what the heck?
Why is it still so tiny?
Can you see it? Oh,
Nice.
I wanted to do this. I wanted to pull back so we could see.
Got it.
So big picture, you see a push down into your zone. You see a liquidity grab right here. It's a bullish order block. It hit your zone. What else can it do? You can buy it up to this high. Now, remember, we're on the 1 hour. We're not on the 3 week. So you can take this trade to this high. It pushes up. It takes the liquidity from Asian session, right? This is a chalk for me. Maybe this wouldn't have been a chalk for Lil Kim until it came over here. Well, actually, maybe over here because it didn't break this high. But this is a chalk for me because we ran these highs and we ran the Asian highs. The pullback is more than likely a 78. I'm just going to guess that that's a 78% pullback. Yep. And it runs right to your TP. And your entry for the sell would have been here. The buy would have been here. So if maybe you're not a seller, maybe you said I don't take this trade because it's counter trend. But if you know where it's going, then okay, don't take the trade. Hey, it's not there. Maybe you could have put you a limit order at the 62 and protected the 78 because you understood that your target was up here. However you would have decided to do it would have been perfectly fine. My point is, if you never see this, if you never understand this, you're not ever going to be prepared to take the trade.
You know what's funny is that this setup is very simple and it's very foreign to people. It just is a testament to how impatient a trader is. This is foreign to them. That's where you're supposed to do the trade. How does that? It's not supposed to be foreign. That should be like, oh, okay, I know what that is. People don't know what that is. I'm like, what's going on? That's where you're supposed to take the trade.
Exactly. And the kill's on time. Even right here, this move up here. Look at what time this move happens. Kill zone. This is a noon trade. Maybe you wouldn't have caught this trade. But this trade right here, you should have caught at 0.9. This trade was a London trade. It just pulls back to give you an entry. So if you go back and you test, you're going to see that these moves happen every day at the same freaking time. The same time. And that right there should blow your mind, man. London session.
Mm-hmm. And that's what I mean. It's like you have a cheat code. It's like you had a cheat code and you can't stop talking about it. Like, we will know when you got it because you're going to be excited. I want to see Rosa get it. Let's Rosa get it. She going to be in here, boy.
Yeah, I want to get it. I'm trying. I be in every meeting listening and I pick up little gems, they're helping me because I try to come to every meeting so I can, and I hear something different every time. So I'm really enjoying this group.
Yeah. You're going to get it rolling.
Let me explain it again so that maybe you understand better or somebody else gets why do we start with a weekly order block? Because that weekly order block gives us a direction. So let's just go look at one of the order blocks that Ish blessed us with this week. Let me go and see what one of the order blocks were. Okay, we got EC is bullish, EN is bearish, GN is bearish, GU is bullish. Let's look at GU. I'm interested. I'm intrigued. Then we'll look at EN and GU. Okay, so we have a bullish order block. What do we expect? What do we expect here? What are our expectations?
When it's bullish, I want it to go bearish before it goes up.
I can't hear you.
When it's bullish, I want it to go bearish before it goes up.
Okay, so I think what you said is your expectations is a pullback first, and then it to go up. Where is it going?
To the imbalance.
Where's the imbalance?
You don't know, say.
Put the fib on and get it to the 0 for the TP1, and then TP2 would be the 27, negative 27.
I really don't like that. I'll do it. Let's do it.
I do. Fibonacci is mathematics. Math
Okay.
doesn't lie.
The math lie all the time.
2 plus 2 always gonna equal 4.
Yeah, equals 6 to some people. Whatever it is that he likes. Okay, let's talk about this. I'm gonna put the fib back on here. I just took the fib off. Okay. So talk to me there, TT. Ghostbusters. What are we looking for?
Hold on,
Where are we taking this trade to?
hold on, let me put back on your Zoom. Where we at? Hold on, let me see. Okay. Go down to the
Move, God dog. I'm sorry. You said what now?
go down to the 4 hour and mark your imbalances.
Yeah. Oh, wait. I'm being attacked. Yeah. Hold on. You want me to leave the fib on?
Yes. That's confluence.
Okay, my imbalance is marked.
You marked your imbalance. I didn't see you mark your imbalance.
Right here, girl.
No, the imbalance for the 0. Look to the left. There's a big old
You
imbalance
mean
right
down,
here.
down here.
Stop playing with me.
Are you talking about down here?
Stop playing with me for real.
Listen, this is the 0, girl. What are you talking about?
No, you know what I'm talking about.
You mean up here at the top?
To the left, the big imbalance on the 4 hour candle. That big red imbalance. Lord Jesus. Yes. Yes, sir.
But that's what I said is marked with this line. You want me to mark it how?
Well, you know, I'm doing 2 things at once, you know, so give me some grace here.
Listen.
Yeah, mark it. Go ahead. Okay, now if you wanted,
you want me to put a box around it. You want me to put a box around it.
Yeah, you can put a drag it across.
Yeah, let me make you happy.
If you want, we can do this the Selena way with the GAN box and mark up that candle 50%.
I'd rather not. I mean, here, I can eyeball it.
Okay.
There you go.
Okay. So there you go. Wham bam. Thank you, ma'am.
Okay.
That's your target.
Let's go back. I don't disagree. Let's go back to the weekly chart. Does everybody understand what just happened? Let me delete the fib. Now, everybody understand that?
Yes.
Yes?
Yep.
Okay, I want to go to the higher time frame just for a minute. And I want to fib from this wick up here down to my chalk move. And I want this pullback. Remember we talked about pullbacks and what we wanted to see? Remember we talked about I wanted to sell GU from a discount and not a premium. I mean, from a premium and not a discount.
Wait, Todd, I'm confused with what you just fibbed up. I'm confused.
I know you are. Let me go back to the weekly so you can see. This is the weekly high.
Mm-hmm.
And the reason why I want to know about this weekly high is because the big picture move, we came down and we broke this low, which gave us a chalk.
Mm-hmm.
Price is going to come back and it's going to sell. We already at fib this move, which was a 78% pullback. Okay.
Mm-hmm.
So If I zoom in on my area here, once we got to the 78, we came and pushed down and we broke structure here, which is a chalk on a smaller time frame. And that's why we're pulling back. So I wanted to fib from that high to this low because I can only sell from a discount, right? So I wanted to make sure that we broke our 50% level. I want to sell from a premium. I keep saying it backwards. I want to make sure we got into premium before we sell. It's just another layer of confluence. Does that make sense?
Yeah, I got you. I got you now.
So we are going to sell first, probably. Like everybody says we are. We're probably going to sell first back to this area before we go up. And this is what everybody is talking about. They want they want the sell down to this imbalance. See the imbalance right here on the 1 hour? They want to sell. Once it hits here, we can buy it. Notice this is the zone. You can buy it back up to TT's 50%. For me, I'm taking profit probably at this high because I don't know how strong the reaction is going to be for this to start pushing down. And I guess it really depends on the time and date that price gets up here. Why am I saying that? Well, because this is the end of the month. We all understand what happens around the end of the month, right? Does everybody understand what happens on the monthly candle?
Yeah, the pullback.
Yeah. And in this case, you know, these monthly candles look raggedy as heck. But my point is this. If we're up at the top, you know, we don't need to leave a wick in this candle. This candle has plenty of wick. But the start of the new candle is probably going to go up before it goes down. So maybe we need to pull down some, and then Friday we'll get a push up into this area for it to pull down, or maybe we'll just be up here, and then Friday we'll push into our zone, and then the next week we might start selling. But my point is, we know that at the end of the month, the wicks start happening in the candles. You got a new beginning for a new monthly candle. It's the very reason that we caught the trade for the JPYs on the 1st of January, right? So once this new candle happens, we'll push down. You know, I don't know how far we'll push down. We might even take out this low, right? There was some imbalance down here, but eventually this chart is saying that we're going to push down and push up. Maybe we'll take the low from this monthly candle or this 2-month candle, and then we'll push up higher. That's what this chart is saying. But not to get ahead of myself. I don't want to lose people. But y'all understand how you can manipulate these time frames to give you the picture that you need to see. Yeah, we marked up our 50%, but if you never drop down to the 1 hour time frame, you're never going to see the imbalance that exists right here. That's exactly where this price is going to. Oh, by the way, isn't it neat how this imbalance is just below this Asian session liquidity that never got taken? You see that? Because that Asian session liquidity exists, it created equal lows right here. All that's coinky dink. Ain't that coinky dink awfully interesting? I mean, everybody can get in a trade. We can go down, take out these lows. People who had their buy stops here trying to trade all the way to the zone, they're gonna come back, take them out. And then once we see that wick, take them out, we in there. And we can take this trade right up, right where they get taken out. Because they quitted it, and we get in. Any questions? Y'all have a better idea of how you can kind of schedule your own trade ideas. Most of them talk like that, yeah. Liquidity,
Liquidity and coinkydink.
coinkydink. I know. I forgot where I heard coinkydink, but
I like it. I'm gonna take it.
coinkydink. All this stuff, man, like we should have this stuff in our toolkits. Like when you look at these charts, all this stuff should start to stand out. These lows, man, that's liquidity. These lows, that's liquidity. Because we know Kim and her crew is over there, they trading this trend line. It's gonna come down. We can just keep extending this trend line over here. But we know Kim and them, we know they got they trend lines on their charts. They mark them up. They're gonna ride them, and then price gonna get here. For months, people use, however long, I don't know if it's months, but for a while, this trend line has held up. So, people just doing what works. They riding this trend line right up here to the top to where the liquidation is going to happen. Any questions?
Why is Griselda jocking Kim?
Kim is celebrating the lifestyles of the rich and famous. I got people on my YouTube page telling me to post more of Kim.
Hey,
I'm like, no, join the group.
hey,
Join the group. Shout out to Kim. Okay. Is anybody confused?
Shout out to Kimmy.
Is anybody confused? Hey, now's the time to speak up because I really feel like we have people who seem to be on a cusp. Maybe you need one or two more tweaks to what you're looking at. Maybe you forget one or two steps, but you have to just keep digging, right? Keep digging, keep searching for the information, keep searching for that missing piece, and eventually, that missing piece will hit you, and you're like, God, dog, that's all I was missing. One of the good things about having Newhoff come on, like he says things in a different way, just like Kim says things in a different way. If you hear these things, maybe you don't understand it the way that I explain it, but you understand it the way Kim explains it. Or maybe you don't get it when Kim says something, and then when Newhoff says it, you'll understand it. Everything is relative, like the same things that Kim does, I do the same thing. I don't use trend lines. I don't use support and resistance. I understand zones. I understand levels. I got it, but
It's the same thing. Support and resistance is zone, or zones.
Well, it is, but that's my whole point. You might not understand it if I'm saying zones. You might just understand support and resistance. You might not understand support and resistance. You might understand order block. You might not understand expansions or imbalances. Or order block is just an expansion. that leaves an imbalance. That's all. And on a lower time frame, on a lower time frame from here to here, there's going to be plenty of imbalance left. This candle right here just goes and taps into the imbalance. That's it. So on the higher time frame, we didn't leave a zone here. On the lower time frame, we left the zone with power. So eventually, the better you get at trading, the longer you look at these charts, the more you understand that, God, dog, that's all we did was this expansion. We left the zone. Boom. All these red candles, boom, 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 boom. No green candles. So now we got to inundate the chart with green candles. Now we got too many green candles in a row. We got to put the red candle back in place. So it's all that we're all saying the same thing. You just kind of have to keep hearing it. Same way a baby has to keep hearing you speak.
I'm a little bit scared of Noir though. His voice sounds like he kind of mean.
Well, hey, some parents are.
Me and Nawaf, we traded together for at least 2 years. I'm really enjoying all the people that I've been able to come across. And we would be in the Zoom meetings for days, just hanging out, right? I know him, I know his family. I call him the voice of reason because he's always able to say things in a way, because people can't take my delivery, but they can take his delivery. So that's why I play complimentary, because I let these guys do that part, right? Nawaf is awesome, right? It's a different voice, right? That's why we need more voices. Adeki or whatever this guy's name is, I need to figure out what his name is. He's got a different voice. Only people can hear it from him, but only someone can hear it from you. So we got to get your voice out there, because people are afraid of our voice. So we need somebody else to have that other voice. Once they know that they can go to you, then they go to you. That's how Kim, she's always been the queen. She's been the queen of the group, and it's always been that. So she's already had the following. We're just adding her to her following and make sure everybody goes there, starts there, and then somebody else will implement something in regards to what Kim does. There will be a second person that does what Kim does and take it over. The women run this group, really. So it's a beautiful thing to see you guys doing stuff. The sky is not even the limit to what you can do here, right? You can create your whole lineage of traders right up under you. Make it happen.
You gotta get on that night with the wife. It's cool.
Mm-hmm.
Yeah, and I don't think I don't think he's mean at all. I think he'll break it down to a way that you can understand it.
We've been in the front all the time. We want you to come forward. That's the thing. And it's like in the old way of life and the old way of thinking, he's trying to tell us to do stuff. Like, no, it's not that. This is where you're supposed to go up and get in the front. Like, this is the thing that you do that with, because it's going to make you $1 million. There's nothing ever that you'll ever be able to do that's going to do this for you. So this is where you get up in the front, whether you're afraid of it or not. You go get up there.
Yeah, by the
You
way,
got the best.
I was just joking. I'm not saying he's mean for real, but it do sound like he gonna beat me up.
But some people believe that. Some people do think that.
Okay.
Yeah. They say the same thing about me.
Everybody has a different style,
Yeah.
Of trading. Everyone has different style of trading. Some people back test, some people don't, and then like some people like to intraday, and then some people like to swing trade, because the intraday you don't have to hold as long. So you're going to have a different trading style and a different trading method, and that might depend on who you can learn from easier, until you get to know the time frames, until you get to know that the structure until you get to know market structure. Otherwise, it may be more confusing.
Right. And
But
no
just
matter
like,
who you go to, it'll be an accountability thing. No matter what trading style you like, you have to be accountable for that style. And that's what communication does. It puts you in contact with whoever you're trying to follow. You have to give feedback, and then it goes back and forth. Yeah.
just like Todd was explaining with the back testing, you see how easily you was able to find your entry time instead of sitting on the computer all day looking at your trade. He clearly pointed out 2 perfect times to get into your trade. So that's what back testing can really help with, is finding out what time do you trade your trade.
Mm-hmm.
What time your trades move?
Yes. And
Yeah,
that's what back testing can
those
help out.
kill zones. Mm-hmm.
And you see, you don't have to go back far at all. That's all you need to look at is the candles that are right in front of you. Yeah.
And then you can see like where, because I love the Fibonacci. For me, I can see like, okay, if I'm waking up during London, I can see like how far this trade is going to go. Like, is it going to take, is that kill zone, the 78? Or is it that kill zone going to take me to the 68? I mean, the 61 or the 70 or whatever. But then when you start to see it pulling back, when you start to see that chalk on the lower time frame, we know like, okay, well, you might need replay to back test the smaller time frames, but it's you'll be able to see it forward testing just the same. And yeah, like if you could stay awake during that time, I think I've had great trades during London session. If you can get in and then put that stop loss where it's supposed to go, and then you can go back to sleep, I think you'll love it.
It's exactly why I trade that session. You know, the volatility is not New York style volatility. But the trades are always so clean.
Yeah.
You know, it's just a matter if you're getting it at 1, 2, or 3. That's really what it is. And you can ride them trades to the wheel fall. It all starts too, in my opinion, you have to have a bias, right? You're either bullish or you're bearish. And if you're bullish, you're waiting for that confirmation and your setup to happen on that time frame. If you just can't come into, I guess you could come in with no bias and you take whatever order block presents itself. But I just think that's problematic.
Yeah.
Because if you're bullish, then you already have an area that you're looking to take the trade to. You know, and that's why we use a weekly order block, because, hey, man, we understand that, hey, price needs to sell to this point, and then it needs to buy to wherever it's going. So we already know, we have an idea of how far this trade is going to pull back. We might not know exactly, hey, man, this is going to pull back 62%, but we know where the imbalance is. So we can target that imbalance. Maybe you don't take it to trade. Maybe you don't trade that pullback. Rosa's going to trade the pullback. Maybe you don't. Maybe you just wait and you say, okay, once it gets here, I'm going to buy it from here to where it's going. However you want to do it. You can set alerts. You can put your limit order in. You know, if you're using a limit order, you need to make sure you protect, you know, the 78. You know, just be good with all that. And your plan should kind of allow you to do this routinely.
And I like what she said. It's a forward test. I'm glad someone else is actually saying that word, because you know what you're anticipating. A lot of people aren't anticipating. They are getting their gunslinging. We have a 78 for a reason. We're all waiting for the same thing. And that's the thing about staying in the back. People are making these mistakes, but they never come forward. And we're all saying the same thing all the time. And the ones that are getting it correct, you know, are consistently getting it correct. Normally the people in the group are the ones that are getting it correct. So we need everybody else to start coming in here, because, you know, or we just come in here and sharpen our iron is what we do, right? We're getting ourselves prepared for the market open. So we already know what we're going to do. But yeah, anticipation is where it's at.
And I want to say also like that this same thing that London kill zone works exactly with Isha's strategy. Like I absolutely love the way she trades, and I just want to give her flowers. Thank you,
Hey,
Ish. But yeah,
I gave it to you yesterday in the car. Where'd you put it?
that's what happened. She took the lead role, and that's what she became. Now she has people following her. It's the same thing. And she's not even out there like that, and she still got people following her. That's what happens, right? Soon you'll have 1,000 people following you, every single one of us. And then it'll be 1,000,000 because you know what you're doing. There's no clown action here. We're getting it done.
Anybody have any questions? Speak now or forever hold your peace. All right, buddies.
Good job. Good job, man.
Y'all see the on these COT reports that the euro is being shorted big time. So we should understand that you know, at some point we're going to see trades trending in the direction that are going south. We should kind of start anticipating it. I think that both of these, the GU trade and the EU trade, is going to do the same thing. This is probably the last week that we're going to have northern movement for a while. Maybe next month will be all south. If you understand this type of stuff, you can kind of put your plan together as a swing trade. This is
Todd, did you say GU and EU, Todd?
Yeah. You can put your plan together as a swing trader to kind of start looking at how you could take advantage, get into a swing position that goes from somewhere around here to this imbalance, because this is more than likely where the trade is going. Now, naturally, you'll have to have, you know, TP1, maybe TP2 down to your target area. You don't want to hold on to the trade and it comes short and turns around on you. You want to take profit as it drops, but you'll also have ample opportunity to add on to those positions if you decide in advance, hey, I'm going to enter this trade. Once the 4-hour crosses the moving average, I'll manage that trade on the 8-hour, on the 12-hour, on the 10-hour, whatever you decide. And then you can just manage that trade by adding positions as the trade pushes down to your TP, right? This can also happen in the GN and EN space. You know, we get the same sort of action from these trades. If I had a line right here, this would be my chalk line right here, because we broke this low. We trade it back up. There is some equal highs right here. I'd have to go up. Let me go up to monthly joint so I can see. Yeah. So this monthly candle only going halfway. So we might go up a little bit higher. We might take out these equal highs before we actually start selling. But you can get in these trades and formulate your plan, right? You formulate your plan by looking at the higher time frames and say, okay, so maybe this is a bearish order block. Maybe we're just coming down to this imbalance, right? Which would make sense. Maybe this week we'll hit that zone. And what is that zone? It's a 78% pullback. To go higher. There's an imbalance right there, right before you get to your 78. So maybe that's where we need to mitigate before we actually start selling. But if you never look at this stuff on the higher time frame, if you never target your zones and you only stay in the moment, you get faked out and shook out. You have to go up to the higher time frames and understand, hey man, these areas need to be mitigated. And you get on the monthly, you be like, okay, that makes sense. This is a bullish order block. We tapped into the bullish order block. We'll go up there. That takes out these relative equal highs. This is the zone that needed to be mitigated. Now, maybe we can sell. And if you look, you go from this top to this bottom. Your pullback is right above the 62, right before the 78. It all works. It's all harmonic. And maybe you can take the trade from here looking to push that. Any questions?
Yes, can you look at EN, please?
It's the same thing.
Thank you.
Thank you. Sweet baby Jesus. Okay. We got a bearish order block on EN.
For now.
All right, 2 months. We really didn't do that. I think that we need to hit this. We need to hit these moving averages. I think we're going to actually get that. So I think we're going to close lower right here. I think we'll actually probably close at this. I marked this zone up last week.
Okay, say what?
Marked this zone up last week. So I do believe we'll push down to the zone. We'll probably get a bearish order block on this one. We're under the moving average. All you would have to do at that point, you fib this bearish candle, and you get your zone. You drop down to the 4i. I'm just going to go ahead and guess that this is probably going to be an imbalance that's pretty important when we fib this thing in the big picture. Because that's a very clean imbalance. So let me just see. If we just pretend the price comes this far down, right? That zone is just above your 78. Maybe we only get this far down. That zone is at your 78. So what I think, and we'll have to wait, right? What I think is once this monthly candle closes, I believe we'll close with a bearish order block. I believe we'll have to go up and mitigate that 4-hour zone. I believe this 4-hour zone will be the target next month. But we have to wait until the monthly candle closes. Does that make sense?
So you don't think it's gonna, because right now it looks like it made relatively equal lows, right? And you don't think that this week it's gonna pull back in order to also
It is
create?
going to pull back.
You
You got a bearish order block. Of course, it's going to pull back.
Yeah, and with that pullback, it's gonna create that monthly wick. Or no?
No, I don't. I think it's going to pull back and sell. You got to figure the first is not until Friday.
Okay.
So this pullback, this pullback is just hanging out here. That'll be shocking to me. I think it's going to pull back like it normally does on the first 2 days, right? It'll probably do whatever it has to do those first 2 days. Okay, my zones are marked up. I would expect for this pullback to happen the first 2 days. Let me go to the 1 hour so I can see what we got going on here. Okay, so maybe it buys up. It's a bunch of trend line liquidity, and it's relative equal highs right here. So I would expect for this to pull back probably to this area and then sell. And if you look at this, we already got our chalk last week. That's only a 100 pip move to the 78. This is the chalk right here.
Mm-hmm.
So we got that last week with the liquidity grab. With the quiddity grab, whenever the quiddity grab is there for you, it's kind of easy. This is probably gonna let you in, take you up. I would probably target this Asian session highs, just, and then once it starts to sell, you can sell from here. And maybe it'll actually sell down to where I thought it was gonna sell down to last week. Maybe your trade will look something like this. Oh, any questions?
Okay, thank you.
Hey, for
I got a
those,
question. What's
yeah,
your
yeah, go ahead.
favorite trade for this week?
I'll be rocking with either EN or GN. I mean, they give out the pips. I also like EU and GU. The pip count is just not as high. I'm chasing these pips this week. So you see these lows right here? These lows might actually be the ones that are knocked out before we get to there. We might not get to here by the end of the week. Maybe we'll just knock out these lows. So if you're taking this trade, you have to be cognizant that you might get 100 pips up and this 200 pip move, 193 pip move down. It might not get all the way down here. So you have to have these areas marked up where you're going to take some percentages off your trade. Don't hold your trade and then watch it disappear. You know who you are out in the market streets. Don't watch it go up and watch your trade disappear. Understand and mark your levels that you need to start taking some size off your trade. You know, by the time this trade goes 200 pips, most of your trade should be closed. You just allow whatever to trickle down here to this TP.
I feel attacked.
Who feels attacked?
Oh my God, I just typed that and didn't send it.
You know what's funny is if everybody who does that would go ahead and type in the chat, it'd probably be full. Because I know somebody who ain't saying nothing that doesn't probably caught off. And that's cool, because I'm not here to try to put you on the spot. That's not the intent. The intent is to make you aware of how often this happens. And so you can come up with a plan to combat that. Everybody should have a plan that combats that type of behavior. That type of behavior is the exact behavior that keeps us from the bag. You know, we trade in our personal accounts or whatever. You have an opportunity to double or double it twice or come close to doubling it twice. And you get enamored with those numbers. And instead of closing the trade, those numbers disappear. And some of you even let them go red. And it's just a shame. So let's not do that. Let's make sure that we're not doing that this week.
Yes, sir.
Does everybody have a strategy that works?
Yeah, just get in where everybody places their stop loss.
Everybody, you know, hey, that's cool to say. But the people don't, the people know that it looks like. Do y'all know where people have their stop losses? Can you pick it out on the chart?
Liquidity.
It is. But can you pick it out on the chart? Can everybody pick the liquidity zones out on the chart? Does everybody
Yeah.
know?
Above or below a zone.
I get it. But okay, so let me give you an example of how I caught me a GN trade.
Let's not talk about the GN trade. GN pushing it.
These 2 weeks. I caught this GN trade at 9 when I saw that wick. Hush.
I'm looking at you right now.
I caught
Tapping it 8-hour order block.
get. Hush.
Are you talking to your dogs?
Yeah, my brother's house sitting shush. Not house sitting, dog sitting.
Okay.
She's upset. You better stop growling, homegirl. All right, good people. I don't want to beat a dead horse. We said the same things over and over. If you have your bias coming into your session, right? Whatever pair you're trading, you have your bias. You understand that you need to see liquidity taken out. You understand what time your setup is generally going to happen. You are ahead of the fray. If you have those 3 things, you have the makings of a decent trade setup. You're armed. Even if you can't see it real time, you need to go back and look for it. After you miss the trade or you get your sloppy entry, you go back and you look like we did and say, God dog, man, I got in at 8 o'clock and the liquidity grab was at 9 o'clock. I should have just waited. Once you start looking and you start understanding what it looks like, it gives you an opportunity to be on the right side of the move every time as it happens. Any questions?